market and an economy standpoint, is coronavirus history? Let's discuss that with Amit Khurana. Amit, on Monday, all kind of permutation combinations were drawn, parallels were drawn by UBS and other global brokerages that what SARS did to Asian economy a couple of years ago, Corona would do the same. But for the moment, it looks like not only, thankfully, the virus has got contained, and the markets are also not really scrambling with fear.
Well, I guess so. I think that looks like the case to be, and I hope that is the case. I think it has to be seen in two contexts. One, where are the markets currently trading versus the previous instance? Previous instance, we were actually in a corrective mode and we were sharply lower going through a recession at the global end. This time, that's not the case. The only apprehension which is currently driving the sentiment is what impact does it make on the Q1 earnings for the broader Asian economies in terms of growth patterns. I mean, if this extends to the February month, then you will eventually see some downgrades playing out. And that, I think, has been one of the features which has led to this sharp reaction in the markets last couple of sessions. And against that, I mean, we tend to correlate it to a lot of other asset classes. I mean, if you see the dollar index actually made a bounce back, the yields declined immediately. So it was probably a one-off reaction. I would sense that over the next few days, this should start stabilizing and we should be back on track, assuming that this is the current case. But we do believe that volatility at the global level and India especially over the next few days will be elevated. It has gone up irrespective of the virus scare that we've seen. So the worlds will tend to be a little more elevated than usual. And that, I think, is one to watch out for.
Yeah. In fact, talking about the coronavirus, here's Tim Cook from Apple, and he sounded off a warning note. He's saying not even Apple is immune to the coronavirus sweeping the globe, with suppliers and stores impacted by the deadly disease. That's the word coming in from the company CEO, Tim Cook, who's saying that the company is working on mitigation plans to make up any expected production loss. That's the word coming in. He's saying China has extended New Year holiday break from the end of January up until February 10th, which will impact Apple supplier factories. So that's one of the biggest CEOs in the globe, or in the world, I should say, Apple, which is saying that their business will definitely take a hit because of the coronavirus.
See, Tata Motors, I mean, the JLR business in China surely will take a hit.
For sure.
You also have to remember the economic backdrop for China has not been great for the last couple of years. So for an economy which is slowing down, and when you are, just in the center of what is the biggest festival or the biggest celebration, it's like their Diwali. Yeah. And when this unfortunate thing happens, A, in terms of demand, B, in terms of sentiment, and C, in terms of the supply chain and logistics, it will surely have an impact. And we've seen that when a sale goes away, it does not come back. I mean, if you're planning to dine out that night, if you don't go, you don't dine out twice successively. So it's unfortunate, but it's true. Now, mathematically, you cannot establish that, this is the impact of coronavirus, this is what will happen to individual companies. But I guess it would not be, it's not a difficult scenario to imagine that coronavirus will have an impact, at least in this quarter. And if China is going to struggle, it's going to have impact on global growth, global logistics, global supply chain, auto, metals, anything which is connected with China surely will take a hit. But I'm going to shift gears completely and talk about something which market celebrated yesterday, United Spirits. Suddenly a 13% spike there.
United Spirits sectors. So we've been backing up.
People are consuming liquor, they're eating burgers, they're eating pizzas, and the rest of the economy is in a slowdown.
And when the stock goes up, analysts are like,
by the way, there's a different way to look at it. Probably they're not consuming as much liquor, they're probably conserving, but the company has really managed the costs effectively. Yeah. So I think the two sort of tailwinds which really helped USL, and something which we've been calling out for the last couple of quarters, is very clearly raw material inflation is behind these, behind the sector players. I mean, you see the other companies like Radico Khaitan, UB also, I mean, we would expect the raw material inflation to be much more muted. And secondly, internal cost measures. And then the fact that the portfolio seems to be premiumizing over the last couple of years, and that is beginning to sort of show up in the broader operating metrics. Going forward, one would expect this to sustain. In fact, over the next couple of months, you would see possibility of a price hike being allowed by some of the state governments, especially Karnataka, which is a pretty large market for USL. And that should play out as a further tailwind for FY21 and 22 earnings. So we've been calling this as one of our favorite sectors for the last couple of quarters, and we continue to back it up. So between USL and Redico, it's a question of mix-up. How do you want to position the portfolio? But we like the space quite good. We're pretty bullish on that.
Yeah. Kunal, after a 14% move, a breakout clearly, where next for USL?
I think the charts are definitely headed for much more returns. I don't even expect that you might see a substantial retracement into the stock price, and the reason for that is generally you expect that when a stock goes into a result, there is huge amount of built up on open interest. There's volatility which tries to come back into the stock price, but we've not seen any of those factors earlier playing out for United Spirits. And then when the stock opened, I think 5 or 6% gap up, it just about saw sustained buying. So that means that there was more delivery based buying, there was more open interest which was now built up into the stock price, and that generally has a positive effect for at least the very near term. So yes, the stock has given a strong breakout yesterday, but this is more of a surprise breakout, and that generally tends to last more longer. The next set of targets now for USL, as we discussed yesterday, could be in tune for another 60 to 70 rupees higher. 740, 750 is where I believe the stock should be headed, say, over the next couple of weeks.
Okay. A couple of reactions that we're probably watching out for today. Let's take a look at Tata Coffee. Let's just, Amit, get your view on that one, because huge margin expansion that we're seeing as well, from 11 to I think about 17% coming in on Tata Coffee.
I've not seen the numbers in a fine print, but I think it was probably a reflection of their international operations probably doing well. One of the entities did exceptionally well, and probably that was the big driver of the operating leverage that we saw. But I can't really comment in detail. I haven't seen the fine print in that.
If Tata Coffee does well, will Tata Global also do well? Because Starbucks is doing well. Tata Coffee is a subsidiary of Tata Global.
I mean, may not be such a big linkage in the sense that Tata Global Beverage is undergoing a significant portfolio shift, and the entity will come in its new avatar. We are seeing that in the works.
Would you buy this? Would you buy this? Because when the stock is getting excited because there is a change of CEO. Typically, I've seen that markets, they tend to reward if a good business sees a change of an extraordinary or a talented CEO. We've seen that re-rating happen in ICICI Bank. We've seen that re-rating happening in Praj.
Axis.
We've seen that re-rating happening in Axis. Within the FMCG space, Varun Berry and Vinita Bali. Britannia has changed completely. Are markets right in assuming that the new change of guard at Tata Global will change things around, or this is ultimately a Tata Group company which will not change?
Well, the change is very, very much reflected in the market way. By the way, if you see, this is a change probably at the top end of the management also. When Chandra took over, he is very clearly laid out as to how the capital allocation would be put out. And that is reflecting in the way some of the other smaller group companies, for example, Tata Global, or for that matter even Tata Chemicals, or for that matter even Rallis now talking about better ROCE and ROE profile.
I mean, 3 years into Chandra's regime, tell me which company has got transformed? It is still TCS. Tata Motors is struggling.
TCS was something that he had already transformed in that sense. So
exactly.
TCS continues to be the cash cow.
So, but which are the other group companies? Tata Motors is struggling, Tata Steel is struggling, Tata Power is struggling, Tata Global is work in progress, Tata Chemical work in progress, Rallis work in progress. All I'm saying is that 15th Feb, Chandra will complete 3 years as the chairman of Tata Sons. And with all the expectations which he had put out that, look, I'm going to change the way how Tatas have done business versus they would do business. In 3 years, I've not seen any big change in any of the companies in terms of their profile or financial ratios. That's my limited point.
You may have a valid point, but I would disagree on that completely. In fact, in October of 2018, we had put out a note saying that how is Chandra actually setting up his team, and the tagline of that note, since we're discussing it now, was making an elephant dance. So making an elephant dance is quite an effort. That's exactly what we are saying. Look at the way Rallis has not done a major capex in the last so many years. They're not talking about a significant capex being put up. Complete rejigging of the portfolio. Now, this is not to say that we're bullish on Rallis. That's a separate point. But from a directional point, I think what the cultural shift is coming out in the entire Tata Group is a much better scrutiny of the capital allocation in terms of accountability at the corporate level and getting new blood. And that will eventually reflect over a period of time. I'm reasonably confident on that.
Okay, so just 20 seconds, name the one Tata company besides TCS that you'd be willing to place your bets on.
Tata Global Beverages.
40 times? 1 year forward.
That's
my immediate follow-up question.
What are the other FMCG players quoting at? 55, 60 times, and we keep on finding reasons to justify it, isn't
their
it?
return on equity and the return ratios are in double digit. This is one company which is not even giving me single digit ROS.
Fair
their,
enough.
their
So-
valuations are justified.
So the argument is that the kind of portfolio that you will get to see evolve over a period of time will justify this what you're paying for.
Salt
That's
and
how I would see
spices.
Okay, we're going to move on. We can keep debating as to which Tata Group company is going to really shine bright and overtake TCS perhaps someday. But
Well, compromise on the fiscal, but don't bust the fiscal deficit. Keep it below 4. I think that's the general view in the market. You'll have to, go past 3.3, stretch it to 3.8, but keep it below 4. I think that's not going to disturb the market at all. I'm going to just connect with CK and talk about what is happening to the metal stocks. And CK, good start to the year. Good 10-15 days of elevation for metal stocks, but in last 2 days things have come tumbling down, if I may use that nursery rhyme phrase, tumbling down.
Yeah, that certainly is there, but then all of us are, aware of what is the reason why it came tumbling down the way it did. China, after all, is the biggest consumer of metals and has always been a driver of metal prices across the globe. And if this Wuhan area is the main industrial belt and 50-70% of the people have run away from there or have been evacuated and factories are now abandoned places, the world is definitely worrying that metal intake by China could suffer, and that is why we are seeing a quick amount of liquidation of leveraged positions in metal, which is also leading to some amount of profit taking in metal stocks. Metal stocks, mind you, were on an upward tilt until a few sessions ago, and I think this China matter has only accelerated. See, the confidence in metal has never been very high, although steel did look up because they had taken some, I think, not less than 3 price increases on a trot, and I do believe that that will still sustain them. So this virus thing is bound to blow out quickly enough, because that is what history has shown us, that every virus, whether it has been some chicken virus or some other virus or SARS or whichever it has been, I think all of them have blown by after a few days of scare. So I don't believe it should be any different with Corona. So I think particularly in steel stocks, lower levels that are being reached right now, I think those are to be used for buying. I would definitely be on the watch out for buying into a Tata Steel at lower levels, and then followed up by Jindal Steel. I think Jindal Steel has been in the thick of things as far as traders have been concerned, so I would definitely watch that as a buy if it were to fall to about 165 to 70. A couple of percentage points down on Tata Steel would also make it a buy. Hindalco VEDL I'll probably want to take a look at a little later. JSW Steel I wouldn't want to look at right now, because I think poor numbers will be fresh in everybody's minds, and therefore that will be a bit of a laggard right now. Coal India generally doesn't count. NMDC is bogged down a bit and they will want to watch budget and see it go past. SAIL is always also ran in this particular space. So Tata Steel, Jindal Steel, followed by Hindalco would probably sum it up as my list of interesting candidates.
Amit, we are talking about the slowdown in the economy. Consumer sales have plummeted. Auto sales have plummeted. But the Bloomberg screen in front of me, and I have list of stocks which are at a 52-week high. There is Bata, there is Page on it, there is Westlife, McDonald's, and there is Jubilant Foodworks. These are expensive stocks. They're complete proxy to consumer. A lot of the consumer spends which they represent is discretionary in nature, not necessary in nature. You buy a shoe when it may not be need, but you just buy it for aspiration factors. You eat a pizza not when you're hungry, but you want to celebrate. Why are these stocks, which are expensive stocks, going higher when the economy is slowing down and consumer has slowed down?
Well, there are very, very micro level reasons for each of these sectors, and it's a very diverse basket that you suggested. So
as a concept, I'm saying, as a concept, these stocks are
so footwear, I think very clearly two things are emerging. One, and we've been sort of writing on it for years now, and our view has been that you're clearly seeing a shift from unorganized to organized branded wear. So irrespective whether I have a slowdown or what, I still need a pair of shoe. So while I was buying unorganized, unbranded earlier, I'm now going to pay a little higher for a branded product. And obviously, some of these companies have positioned their products extremely well. I mean, Bata and Relaxo obviously have been sort of class apart in that. Balance sheets have been pretty strong. They've been cleaned. Working capital has been very well managed by all these companies. So probably that's one reason. Jubilant, again, you can ascribe to the fact that they had a major turnaround of the portfolio in terms of operating metrics. They closed down underperforming stores, and that has reflected in the operating leverage and therefore the re-rating. Now, some of the other sectors, yes, there is a brunt which they have taken. Page, for example, you mentioned it's at a 52-week high, but it's still lower by almost, 40% from the peak valuations that we saw. Now, that's a different category altogether that we are tracking. And our sense is that Q3 was not, again, a great number for this particular category. But you will naturally see a bounce back in some of these names based on, bottom fishing, value picks here and there. That's probably going to play out. So I would not really read too much into 52-week highs because it has to be seen related to the context of what peak valuations they were quoting at. So some of these names have done exceptionally well, and probably there are specific reasons for that. But overall trajectory, I still believe that discretionary will be the one to look out for. You have to pick your sector. That's a very, very important element, in fact. The category that you pick up and the name that you back up there is far more important.
So what's the new category which will do well outside of food and shoes and clothing?
None. In fact, there's one category which we're watching out as to how the behavior works out over the next couple of quarters, and that is durables. And durables, I would say, a broader category, which is air conditioners, washing machines, the classic high-ticket durable items. Is that going to show us a traction over the next couple of quarters if the budget is seen as delivering some tax cuts, turnaround in the economy, and a sentiment change? Probably this is more of a sentiment issue which should play out. By the way, rural should do relatively well because now you have bumper rabi crop. And if the urban sentiment sort of shows any bounce back, then that will be the category that we would watch out for.
Okay. We'll let you go on that note. Thank you as always for taking the time out and joining in.